Hey there, it's Mark from Caliber. It is Friday the 13th, November 13th. I hope you have had a good day and a good week. Interesting week. I'm sure that you all realized that on Tuesday it was 75 degrees, and by Thursday morning it was like 31 degrees out. So you gotta love living in Michigan. So we're gonna go ahead and go through the markets a little bit. So we're gonna start with today's bond market. So this is today's bond market. It was pretty steady. I mean, it looks like the pricing went up a little bit early morning and mid-afternoon, and then kind of dropped back down a little bit. So rates pretty much stayed the same. The week, though, was pretty interesting. So you'll see that for the week, we started here. Remember, this is the price. So price and the rate is an inverse relationship. So looking at the weekly graph, we can see that the bond pricing lost ground, especially on Monday and Tuesday, where the stock market lost quite a bit. Now, the stock market did lose about 338 points, the Dow, for the week. But typically, when that much money is coming out of the stock market, it goes into the bond market, which pushes the price up and yields down. But with all the news going on and everything else, because anytime there's positive news on the vaccine, which is positive news for the economy, it's bad for rates because it's considered inflationary. So you can see that the pricing kind of dumped, and then till about Thursday, and then Thursday it started to get better again, based on just normal reports, but based on normal reports. So for the week, though, there was pressure on rates to go up a little bit. And again, this is all relative. Rates are still super low. So let's take a look at the past month. You'll see it's been pretty choppy. Again, this has to do with this whole area of the vaccine and the election. So I expect the markets to continue to be choppy based on news that's coming out on the economy and where we are with vaccines and how fast they think they can deploy it and who's going to get it and whatnot, and how that's going to affect the general economy. Also, the markets are really concerned that a lot of the states are going to start clamping down again and shutting everything down, which is going to hurt the economy. So that's also a factor to consider. And then let's take a look again from in March when everything started. You can see that really since about August 11th, there's been this downward trend in pricing, which has pushed rates up a little bit. But again, this is all relative, so rates are still super low. So really, moving forward, there isn't too much news out next week. There's a jobs report. There's the producer price index, which if it comes in a little bit hotter than expected, that's considered inflationary. So it may push rates up a little bit. But again, you got to remember that the Fed is spending $100 billion a month keeping rates low. So it's still a great time to buy. It's still a great time to refinance. Anything that I can help you with, give me a call, 248-705-8431. We'll go from there. Thanks and have a great weekend.